Hello, this is Mike Swanson. I run the website WallStreetWindow.com, and the odds are that you're watching this video because you got an email from me telling you that it's up. If you're not yet on my free stock trading email list, scroll into the description of this video, subscribe, then you'll get my updates before the opening bell. Now, I want to talk with you today about what's happening in the gold and silver market. I believe that they're in a position to do very well this year. I think we're actually starting a metals mega super cycle, and I'm going to show you why I believe this. I don't think it's like a prediction. I think it's something that's actually starting and been starting for several reasons. Let me show you the charts I'm looking at, and we'll get right into it. First, this is the S&P 500 today, down 0.65%. And kind of the theme I'm going to be on with you is this. Ray Dalio says the dollar global order is fading away. SPY implications. Well, I'm not here to warn you on the S&P 500. I think it's going to continue to rally as it's been doing the past couple of months. But I want to point something else out to you. In the past year, at this point, the S&P 500 is actually down 9.42%. Of course, it was down more than that a couple months ago, down over 20%. The NASDAQ down over 30%, because we were having a horrible bear market in 2022. But look at this. The S&P 500 in the past 6 months is basically even, up almost 1%. This is from July 25th to January the 24th. So we see the S&P 500 down 9.5% over the past 12 months, basically even over the past 6 months. Now, remember that because we're going to compare that to what's going on with the price of gold. When we look at the past year in the price of gold, while the S&P was down 9.5%, gold is up 5.16%. Now we're looking at GLD, the ETF that tracks the price of gold, up 5.16%, while the S&P was down 9%. When we look at the past 6 months, we see that it's up 11.65% when the S&P was even. So we're seeing green gold when the S&P has had a red year, and silver is also linked to gold too. So this is what happened in the past, but I think we're in a position to see gold continue to outperform the U.S. stock market going forward. Now, this is not to say get out of all your stocks. If you got the SPY, I'm not telling you to sell it. I'm telling you, look, I own U.S. stocks. I own gold and silver. I own physical gold and silver. I own metals ETFs. I own mining stocks too. It's about diversification. I don't bet all in on one thing. But this is where I think the best, some of the best returns are going to be made in the financial markets. And let me show you why I'm saying that. Now, one of the things I do in my market analysis, I talked about price analysis in the last video I did, is I look at how something is performing relative to the S&P 500. If you're a professional money manager, your goal is to beat the S&P 500. If you can't do that, you're going to end up getting fired. You're going to end up losing your clients at some point. If you can beat the S&P 500, then you do that consistently year after year, that turns into a lot of money, huge wealth, and it does that too if you're an individual trader or investor. So that I make that my goal. If you look, last year, I didn't lose money. I was only up a few percent. I didn't make 50%. I didn't make 100%. But by only making a little bit, I put myself in a position to vastly outperform the stock market because most people are still crawling back on the losses that they had last year. And one of the things that helped me was I was involved in most of last year in gold, silver, and the mining stocks. Now, this chart here is taking GLD and dividing it by SPY, creating a ratio. And when this ratio goes up, it means that GLD is outperforming SPY. That ratio in the past 12 months is up. No surprise, as we just talked about earlier, gold is up in the past 12 months, while the S&P 500 is down. Gold up around 5%, S&P down 9.5%. Huge price performance differential, and it shows up in this chart, and that's very significant. Gold, I believe, is something we all want to be heavily involved in because of this, and silver tends to be, go up more than gold when a metals bull market more fully develops. And I'll show you what I'm talking about in a minute. But this is just the past 12 months. And notice that we made a high in this ratio in June, and then everything pulled back. Gold pulled back too when the stock market was pulling back from June to August. And then if we, though, look at this ratio over 30 years, we can find out something huge, that high of last year, if we go through that, I think we will in the coming weeks, the coming months, I think that's going to signal the start of a mega cycle of outperformance for gold, silver relative to the U.S. stock market. And that means that gold bugs will rule the markets over the next several years, perhaps over the next decade even. And this happened from 2001 to 2011. That was the last real mega cycle in the metals markets. And I first started to buy mining stocks in January of 2002 and was able to do well, in those years because I was focused on them instead of the technology internet stocks that so many people were still trying to trade. I've been in the markets now since the 90s. So this ratio, of course, had a horrible decline, from 90 in the 90s as internet stocks are booming, gold was going down. The ratio bottomed out in 99, went sideways, broke out of the 2000 high, 2001 high, and 2002, and just went up until 2011. Now, so I think, that high in the ratio of last June is as significant as the high set in 2001 and the year 2000. And I think we're going to break it. And when that happens, you're going to see even more buying than you've seen so far in the mining stocks. Mining stocks have been outperforming the U.S. stock market. And one of the best performing sectors, as I mentioned in the past couple of videos, some of the past 2 weeks since September. Now, what I want to show you is some interesting things. So obviously this ratio made a peak in 2011, and then gold, silver, mining stocks had a terrible bear market that didn't make a price bottom until 2016. Now, what I want to point out to you is a couple other metrics. Next is the XAU divided by the price of gold. Now, the GDX mining stock ETF didn't exist, back in 2001 or the 90s. So I'm using the XAU mining stock index to track what the mining stocks did. And this time we're comparing it relative to the price of gold. And I just want you to notice that this ratio, after the gold divided by S&P 500 ratio bottomed in 1999, this ratio just kind of went sideways, and it had periods of big outperformance relative to gold, and then it would come back down. But look at this. In 2000, let's talk about silver. So in that metals bull market, silver was going up and down with gold, but it wasn't until really 2004 that silver kind of really took off and started to go up exponentially. Silver was under $10 and then went up and touched $50 in 2011. 5 times move. The type of move that the crypto gurus were telling you was supposed to happen with Bitcoin last year, and Bitcoin crashed instead. Well, silver is going up now. Gold is going up now because the dollar has made a peak last year, and that's helping the situation. Before we talk about that, though, I just want to point out to you what happened in 2011, 12, 13. Silver just took off, went from 20 bucks touching 50 bucks in 2011, but the mining stocks barely went up at all. In fact, the XAU divided by gold, and you can divide by silver ratio too, declined. The mining stocks are underperforming the metals dramatically, while silver had that final surge up and gold went up too. That was a huge warning that move was the final move of that mega bull cycle. A massive warning. I was around back then, and so were friends of mine like Jordan Roy Byrne, David Skarika, warning that this was a top in the metals markets, even though both, especially Jordan, he runs a website, thedailygold.com, his business is sort of linked to the bull bear cycle. Even with that fact, he was warning people top, and it didn't happen. And then you had a horrible bear market. Point of this is that there are warning signs at tops. 2011, 2021, we saw such a warning sign in the U.S. stock market when the internals of the market disintegrated and the averages went up higher for like 6 more months. That was enabled us to warn. And I personally built up cash positions and started shorting, and then I shifted. And now I'm bullish on the U.S. stock market, but I still think gold and silver are going to outperform the S&P 500 because of these charts I'm showing you. Now, silver is not soaring, it's not going crazy, and I have gotten emails from people saying, why isn't silver going up as much as gold? Well, that's what silver does at the start of a mega metal cycle. Gold tends to go up more than silver first. You can see that's what happened in 2001, 2002. You look at the charts, it doesn't even look like silver moved, and then silver broke away. That, I think, is what will happen. I don't know when, but at some point, silver, will go up more than gold, and that could go on for years. I think silver can be over $150 to $200 an ounce at some point in the next 5 years. But we're going to see gold and the mining stocks do better first. And if at some point in the next couple of years we see silver go crazy like it did in 2011, the mining stocks aren't going up, that's a time to be telling us this mega cycle's over. But why is the mega cycle happening? And that's, you saw a glimpse of that Ray Dalio article. Well, the chart below tells us an important story. This is the U.S. dollar index. And historically, the U.S. dollar, the gold trades opposite to the U.S. dollar. So when the gold divided by S&P 500 ratio was bottoming in the year from 2001 to 2002, the U.S. dollar index during that time was topping out. And then the U.S. dollar index went into a bear market at the same time, from a 10-year, really a 10-year bear market from 2002 to 2011, 2012. Well, that bear market coincided with that last mega cycle in the metals. And when the U.S. dollar index turned up in 2011, that was the peak. Now, what's happening? The U.S. dollar index has topped out. It topped out last year in the fall. It had a great rally in the first half of last year, especially as the Fed was raising rates at a faster pace, a bigger pace than other central banks around the world. Those 75 rate hikes, they hurt the stock market. They did push gold down for a period of time, but they helped the U.S. dollar index go up. In fact, at one point, the U.S. dollar index was practically the only thing going up in the stock market. But that all came to an end when the Fed reduced the size of its rate hikes from 75 to 50 and now 25. And now we probably got 2 more rate hikes, maybe only 1 more, but probably 2 coming. We're at the end of the rate hike. This rate hiking cycle is over. That's why the U.S. dollar index topped. That's why it is in a bear market. And the same thing happened in the 90s. The internet bubble came to an end in the year 2000. The stock market topped, bear market started, and you had interest rate reduction cycle, the hiking cycle, that ended, and it was a huge shift in monetary policy. That's what we're approaching, and why this mega cycle is only starting. And it's exciting for gold, silver, mining stock traders, and investors. It's all linked to, and you see, it's all, inflation is a symptom of that. You saw it last year. Look, everyone in the markets, on the media, and it's just human nature, focuses on the daily news, the daily price action. We looked at it. We looked at the daily price action of S&P 500 when I started this video. But it's these long-term trends that are the real secret to making the big money. It's aligning with them, and we're seeing a mega cycle. And if that ratio, and I think it will, the gold S&P 500 ratio goes through the high of last year, you're going to see an acceleration of what you're already been seeing over the past 6 months of the outperformance of gold relative to the stock market. That's only going to magnify. The rally will only pick up even more in the mining stocks because few people are paying attention. Few Americans are paying any attention to this at all. They're still focused on the Tesla trade. They're still focused on their little crypto accounts that are blowing up, and putting them in an hopeless situation until they get out of them. Crypto has failed in replacing gold and silver as an interest as a safe haven. A complete failure. You were told that you were told crypto would be money. You were told crypto would replace the US dollar. What happened? The stock market went down in a bear market last year. Crypto crashed. Why? Because people don't use it as money in daily life. Because every time you use the crypto, there's a big transaction fee placed on top of it. It's like usury. It's crazy. It's useless as money, and it's not a store of value because it's too volatile. So it failed in replacing gold. All it is an instrument of price speculation, like options are for most people. You can hedge of options. You can't even hedge your crypto. It's useless as an investment tool. But gold and silver is stable. It's here to stay. When the stock market crashed in 2020 with those shutdowns, gold fell half as much as the U.S. stock market did, and then came back even faster. Gold is stability, and we are on uncertain, unstable times. That doesn't mean the stock market rally that we've seen the past couple of months can't continue, but it does mean that gold is an essential thing for investors to have in their accounts and to be involved in if you want to beat the markets. And anyone serious about this game needs to have that as their goal. So if you like this video, hit the like button. If you want to get my next video update from YouTube, hit the subscribe button and then hit the bell, and YouTube will send you a notification as soon as it's up. And I'll be talking with you later.